Give and Grow, what is up? Eric and Ryan coming at you today.
Yep.
Ryan, how you doing, man?
Doing good.
We wanted to use this episode to kind of talk about, 2024 leading up to now, year to date, just kind of from the consumer's perspective, because, interest rates are still elevated and inflation is still high. We're seeing that with groceries. We're seeing that at the gas pump. And we have a lot of global tensions going on. I mean, it seems like every other day I'm hearing of some kind of bombing going on between, Israel and Iran. And when it comes to oil and all that stuff, commodities, that's not good. So yeah, we just kind of wanted to talk about that. Just have a little conversation about it today. Not get too deep into things.
Yeah.
I know this last week the market, I think I saw the NASDAQ has almost given up almost 2 months of gains like in the past couple of weeks. So
yeah,
that's crazy. That's wild.
Yeah, this past week was really crazy. It was like a cascading thing of a bunch of things happening. If you look back in like January up until now, pretty much everybody was feeling that we finally hit the last stretch of like inflation worries and high interest rates. And, you even go back to the Fed, and the Fed was talking about how, we're going to be making like 3 rate cuts this year.
Oh, I heard 6 at one point.
The market was pricing in around like 6 rate cuts this year.
Wow.
But the market's always over its head. But like the Fed was talking about how they were going to be doing, 3 this year. So, everyone was pretty much just feeling good. You know what I mean?
The party goes on.
Yeah. December, I think, was a low CPI print. If we want to talk about inflation, it was low. And the past 3 months, January, February, and March, have all been hot CPI. That like oil's been coming back up. We've been seeing gas prices coming back up. I'm pretty sure that you've been seeing them too. I mean, I'm not going to say that inflation is truly reaccelerating, but if you're going based off the data, which is what the Fed's been saying, it looks like it's been trying to come back. And one could have thought that it was like a seasonal thing because January, like people were probably still spending money that they probably got maybe from like Christmas bonuses or just like some stuff like that. So you could have chalked it up to that. But March was probably a time where we're probably expecting it to go down, but it went back up.
I mean, to me, it feels like inflation is double. I don't think it's at 3.5. I think it's more like 7. Just what I feel with my grocery shop. Not saying that's right. Okay. Not saying that's correct. Because I know the Fed has different metrics they use, but I know other professionals use other metrics. A lot of them are saying inflation's actually close to double compared to what now I'm not saying that's true. I mean that could be false news, but it certainly feels that way.
PCE. The Fed uses the PCE data, which has been coming down a lot, but it's flatlined. I think now, and people are speculating that PCE is going to start coming up. People are speculating that PCE data, which is basically, I want to say it's inflation data x energy and I think food. I think minus those 2. And that basay is like their gauge for like how inflation like actually is.
That's silly, but
I guess because food and like energy are so volatile.
Yeah.
Right? Like, I think it's actually good. Foundational level of inflation. Now, I think the thing that the market reacts to the most is like CPI.
Yeah.
Because I think, with food and like energy, those are the things that like affects people a lot. So, they're like, oh, well, I'm seeing my gas go up. Inflation is probably going back up. And then I think the market kind of takes that and then translates that a lot more to how the economy is doing than like PCE. But yeah, the Fed uses the PCE data. The jobs data that's been coming out for the past few months has been really, really strong. I know that the Fed in particular has talked about how their decisions have been based off of the jobs data a lot. They see strong jobs data, they think strong economy. Yeah. But I think that, and I'm not saying that the Fed doesn't know this. I know that they do. But to me, I think that strong jobs data is going to equal higher inflation.
I agree.
Because people are, if there's more jobs, they're making more money. And if they're making more money, then that's going to cause inflation to be affected.
And supposedly a lot of these jobs are actually like second jobs.
Yeah, they're like part-time jobs. So
just to be able to pay for their bills.
Right. So is it even real, right. Real growth? When you look at like GDP's been coming down a bit. Gross domestic product has been coming down, keeps getting revised, and that's why data is such a weird thing. Things get revised all the time. So what it was initially is probably not what it actually is when it's all said and done.
Oh yeah, absolutely.
So then, you have people being like, oh yeah, like, we're doing so well, GDP came out this number, but then it gets revised down and you're like, oh, well, was it actually a thing? Like, I don't really know.
Yeah, absolutely. I'd say two other big things this week. We had the Bitcoin halving,
Yeah.
That's pretty cool. Get to see what happens with that. I think gold has been hitting all-time highs, not being talked about a lot, but typically gold is viewed as an inflation hedge. We know a lot of central banks have been stacking it up lately. It's been a good trade. I wish I would have understood the precious metals, or I guess been educated on it a little more over the past couple of years, but I'm learning a lot now. But it's definitely something I want to add to my portfolio in the future.
Yeah, I agree. You mentioned about having gold and silver as a hedge, and I'm not, I've been thinking about it this entire time, and it's like that's probably not a bad idea. Having like instead of having like cash, you just like have 5-10% in gold and silver.
Yeah,
and then if it's in like a like a gold or silver index fund, you might be able to do some options on them. You know what I mean? Do some covered calls on them if you get enough one day. That just generates some extra income.
Yeah, true.
Let's just talk about interest rates for a second. So interest rates they're still at like 5.25 to like 5.5 for like the Fed target rate. If you go to the CME watch tool, which kind of like measures the percentage of like cuts versus whatever, obviously May 100% no cut.
Yeah.
Now people are pricing out further. I think that the next one was July.
Yep.
And July had a pretty decent amount of people saying that they could cut in July, but
that's gone down a lot though.
It's gone down a lot. June's gone down a lot for sure. The June meeting has gone down a lot. So the July is where people are thinking that the first one's going to come.
See, I've been hearing September now.
Yeah, well, I mean, if you saw something recently, I've been seeing July.
I also saw, or I heard, where they actually put a small percentage on a rate increase now, all of a sudden.
That's not, see, it's not, it's funny because
I don't think
it's all a
happen.
joke.
Yeah, I don't think that'll happen.
If we get a rate increase this year.
Oh my gosh.
It
won't happen, but that would be pretty funny. This is not going to be handled the same way that it's been handled the last 40 years. We think we have inflation under control, but we might not. I mean, it's shooting up a little bit right now, but I mean, you cut those things too early. I mean, inflation comes.
It's a very difficult
You have more conflict in the Middle East. Oil prices go up. I mean, that could shoot right back up. So
it just proves that like it's not just what's going on over here.
Yeah, it's
geopolitical stuff. Like the oil stuff is a pretty big deal, I would say.
Yeah, I feel like there has to be, I don't want to say pain, like, Powell used to say, but we're gonna feel it. These rate cuts, we haven't felt it yet, but I think it might be coming, not financial advice.
Finish on like the amount of cuts this year. I gave him a prediction. If CPI goes back above 4, I don't think that they're gonna cut it all this year. Core CPI, I think is at like 3.8. And like this is core CPI year over year. So we're just gonna just look into this really quick. Oh yes. So it's at 3.8%.
Wow.
So I think if it goes up above 4, they're not going to cut rates at all this year, and that's not financial advice.
Unless something breaks. You have debt maturing with commercial real estate that's coming up. So there's a lot of things that are it's. I mean, obviously we still have the election and all that. So yeah. So I don't know. I mean,
it's a hard landscape.
I mean, obviously we've seen a lot of red the last week. That was quick. That was powerful. But that doesn't mean that the topping process is over. We could still go back up.
Yeah, because you're gonna have Powell come out and be like, "Yeah, we're just gonna just print money." For all we know, he can come out and just cut interest rates in the May meeting, and we just have no idea. Honestly, I mean,
we definitely have stagflation if that happened.
I think we have stagflation right now.
Yeah.
So it's
well, I
it's
say
hard.
if that happened,
we have like real stagflation.
Yeah,
like for sure, this is the direction, because they're actually making decisions that are based off of something wrong in the economy.
Yeah, if they, like you said, if they cut too early, we just risk higher inflation coming, basically. So
right, I think that we could see ourselves cutting, but when you study these things, it's hard because you think that you know like the projection in which things are going to go, but you have conflicting ideas and conflicting things, because like the job market, when it comes to like how many like non-farm payrolls, like we could believe that those are all just like second, third jobs, which is like manipulating the data in some way. They're not like good salaried jobs, right? You could say that, but it could be that sustaining things. But then you have like GDP coming down now, but inflation isn't like going up like a lot. It's hard to really say anything about what's going to happen within like the next like 5 years. I think that if you have someone telling you that, oh yeah, we're going down in the short or the long term, it's just a bunch of noise still, because nobody really knows. So if you go based off of the data and the charts, I mean, it's really, if you're positioned correctly, if you're playing both sides, but that's not saying, oh, well, buy calls, buy puts. It's like hedging, and your account is structured to where no matter what happens, your wealth will continue to go up regardless.
Yes.
And like, you're always going to have dips and stuff like that, but hedging yourself and being positioned is going to be the key. Kind of like going back to the consumer. I've been hearing a lot of people say that like 100,000 is the new 50K. Well, what do you think about that?
That's the mindset that we have. Then we really need a correction.
well, I mean, but like with like inflation and everything being so expensive.
Oh, I see. Okay. Right. Yeah. And home affordability as well. Right. Yeah. I mean, it's tough out there. Like it's not easy being the consumer. And, no. I've said this before, we don't even have kids. I can only imagine having, kids and a mortgage and all that. So that's why that's all the more reasons to be on your toes and to really understand this stuff. It's tough out there right now, man. There's no, I mean, credit card debt is right now. I mean, people are dipping into their 401ks.
Right.
Like it's people are just trying to eat.
Yeah, there's some stats that I wanted to read. This is from Forbes. It was all from 2023. Stats based off of demographic of like different age groups on why they're all living paycheck to paycheck. These are for people living it's a paycheck to paycheck. It says right here, 64% of Gen Zers cited high monthly living expenses. Most Gen Zers are probably like still trying to get into like their job, or they're like they're like in school and like college.
Yeah.
When I was in college, I felt like that like things weren't that expensive at all. So it's really interesting to see that like, the younger generation is it's kind of feeling things now in their time than like you and I probably felt in like our time. Because
we're both in two separate interest rates.
Oh, that's true.
You were going through a very low interest rate time. Well, yeah, we both were. Yeah. And these youngins in school, they're going through a very high interest rate time. And, that affects student loans too.
It's crazy because like when I started college, I was in it was 2012. When you started college, that was like right after the GFC. That was like right after that. So
it's funny. I wasn't even thinking about those things back then. I had no idea. I was just trying to live life.
Yeah, trying to live life and get girls. That was your prerogative. So the second one that I wanted to read off, 50% of millennials cited lack of budgeting and financial planning.
Yeah.
We just talked about budgeting, and it's crazy because I feel like that like a lot of millennials in their 30s were probably like, man, I wish that I would have figured this stuff out a long time ago.
I was reading the Psychology of Money the other day, and it talks about basically the way you perceive the world is based off your environment, the people around you, how you were raised, all that stuff. But when it comes to the actual world, it's a very small percentage of how the world actually works. So yeah, I mean, I can see how if you were raised and educated by a boomer, they're going to have a different outlook on the economy and how it works. Whereas Gen Zers right now, when they have kids, they're going to have a completely different outlook because they're kind of going through this high interest rate, high inflation era.
Right.
So all that stuff matters, and that's the beauty of psychology. When you think about these things, you gotta look at it in layers, and that's a great example of that.
Oh yeah. So 44% of Gen Xers reported low income as the reason for them living paycheck to paycheck. It says here, when asked to select the top 3 causes of living paycheck to paycheck, the highest percentage of Gen Xers responded low income. Low income is interesting for Gen Xers because I feel like that they're like close to like being boomers, but they're not like, you know, they probably didn't have like a lot of like the opportunity that like they had, but they're probably close to having it. I don't know what the average median income is for like reported Gen Xers, but low income in general, especially right now with like so many people taking on multiple jobs, it just doesn't work the way it did back in the day. You know what I mean? Where you can have one job and that just does everything for you. Like you have to have multiple ones. Me trying to be like a Gen Xer going into like today's landscape where like I had a good job back in the day probably, but now inflation and everything has kind of like killed a lot of my purchasing power. So it's a different like change in how you have to view your finances. I think about people that are in their like 50s and they probably feel like that they still can't get by, and they probably are like kicking themselves because they didn't really take it seriously when they were younger. The last one was this is for the boomers. 64% of baby boomers cited rises in costs of living as the reason why they're living paycheck to paycheck. This is a very boomer thing to say, but I agree. Like, you know, when they came out of like the 80s and the 90s, and houses were like so inexpensive and food wasn't that much and things were so, you know, good because of low interest rates. The fact that everything has just gone sky high, it makes a lot of sense. Pretty much everybody is having to deal with this environment right now where everything is just so overinflated. And we talked about this a couple weeks ago, how like, you know, the dollar has lost its purchasing power. You have to have more in order to like do better than what it was back in the day. Regarding the election and how things are going, I think that there's a common consensus that if Biden gets elected, that means that like, oh, well, the economy is going to do much better because he's probably just going to be printing a lot more money or something like that. And then if Trump gets elected, because of the amount of volatility that Trump brings to like literally everything in the States, that the market is actually gonna crash. I don't know if I believe all of that. Well,
they said that the first time Trump was elected, and yeah, there was a quick little crash, but it quickly shot back up.
Right. I think that like printing more money right now while inflation is still running rampant is just going to cause a lot more issues down the line for sure.
Yeah, I mean they're in a box. That's just the bottom line. They can try to do things to make things seem better, but I mean ultimately, you know, when a pendulum goes far out, it has to revert to the mean, and they're not allowing that to happen, and that just makes it worse. But,
but we can't also forget that they can kick the can down the line.
They could
probably as long, like I wouldn't be surprised if this gets kicked down forever. People might say like, oh well, you know, they have to account for these things one day, you know, it just has to happen. But it's like, as long as they can print money, this is going to keep on being a thing.
See, I don't think they can do it forever, because eventually inflation would eventually become hyperinflation.
But we had hyperinflation and that got corrected. So,
well, I mean, it's still not corrected.
Well, it's much lower than what it was, though.
Right.
Which you can consider to be
it could be double. Yeah.
Now the base.
I mean, I don't feel the correction.
The base floor of inflation. Well,
because if
the data is suggesting it, and I know what people are saying. Oh well, you got to just talk to the guy down the street and ask him how it's going. But the data is suggesting that things haven't coming down. Now, do people feel it? Probably not. But unless you believe that the government just manipulates everything, which is a very, very high possibility.
I mean, if they keep printing, it's just you're gonna keep having these cycles. Inflation, interest rates have to go up, even stagflation.
Is it kind of weird that because we know now how to position ourselves during both of these, that you kind of don't care what happens anymore?
Yeah, it is.
Because, and like, it sounds bad because you kind of think, oh, well, fundamentally you want things to be good.
I think now it's more about, I would like my groceries to be at a decent level. You know, I would like my gas to be at a
first
decent
world
price.
Things for sure. Like I want cheap gas and cheap groceries for sure. But we know that from a like positional level, like hyperinflation comes back, stocks are probably going to get killed. Opportunity for us to, you know, to
you're
get
right.
back in.
You're right. It's all about your perspective.
Right. You know, we get in, inflation comes down, they print more money, equities go up, we're freaking making bank. But I don't want to be unsympathetic to a lot of people that don't really care about that kind of stuff, and they're really getting killed. It's just a thought that I had. You know what I mean? Like, you know,
we're at a certain point where we're either going to keep going down or we're going to shoot back up. We'll see what happens. You know, sell in May and go away is coming up, so we'll see how that plays out. But
the summer is really bullish. So that's from like a seasonality perspective.
Yeah, I'm not making any predictions. I'm kind of just watching right now, collecting my 4 to 5%, and I'm happy.
If y'all enjoy this, please be sure to like, share, subscribe. There might be some times in the future where we'll probably have a break just because of our like vacation stuff or whatever. Yeah. But you know, we want to be able to get as many of these out as we can. So let us know in the comments if there's a topic that you want us to like talk about. We're going to be able to bring it up on the Growth Show. That's what we're here for. We're here for y'all. We're here to talk about our experiences, help y'all understand things from what we've learned, because we made a lot of mistakes. So
yeah, absolutely. Well, until next time, guys, we love you. Let's continue to give and grow.